This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices extended losses on Tuesday as the threat of further interest rate increases and continued Russian crude flows cancelled out demand recovery expectations from China. March Brent crude futures fell 5 cents to $84.85 per barrel by 0415 GMT, while the more heavily traded April contracts fell by 32 cents or 0.38% to $84.18 a barrel. U.S. West Texas Intermediate, WTI, crude futures slipped 33 cents, or 0.42%, to $77.57 a barrel. Oil markets are facing downside pressure as risk-off trades prevail ahead of the Fed meeting, along with a strengthened USD, said CMC Markets analyst Tina Teng.
The Russian government on Monday banned domestic oil exporters and customs bodies from adhering to Western-imposed price caps on Russian crude. The measure was issued to help enforce President Vladimir Putin's decree of December 27 that prohibited the supply of crude oil and oil products from February 1, for 5 months, to nations that abide by the caps. The G7 economies, the European Union and Australia agreed on December 5 to ban the use of Western-supplied maritime insurance, finance and brokering for seaborne Russian oil priced above $60 per barrel as part of Western sanctions on Moscow over its actions in Ukraine.
Moving on to the top news in the energy sector.
Venezuela's state oil firm is toughening terms for buyers after a month-long halt to most exports of crude and fuel, demanding prepayment ahead of loadings in either cash, goods or services, company documents showed. PDVSA's new chief executive Pedro Tellechea put the move in place this month. It reinforces measures implemented last year after several buyers skipped out on payments for oil, which provides most of the South American country's income. After taking the helm, Tellechea launched an extensive audit of supply contracts, according to a written order to PDVSA seen by Reuters.
The profit from producing diesel in Asia has been declining as Chinese refiners increased exports to the region, but the looming European ban on Russian refined fuels looms as a potential game-changer. The margin, or crack, to produce a barrel of gas oil, the building block of diesel, from Dubai crude at a typical Singapore refinery dropped to $30.90 on Monday. This was down from a recent peak of $38.89 a barrel on January 25, but more importantly the crack has been dropping since Chinese refiners boosted exports in the fourth quarter of last year.
Next, we have the top news in metal markets.
The European Union's anti-dumping tariffs on Indonesian stainless steel had cut exports severely, an Indonesian trade ministry official said on Tuesday, explaining the country's decision to complain to the World Trade Organization. The WTO said last week that Indonesia has requested dispute consultations with the EU regarding the anti-dumping duties. The EU last year imposed an anti-subsidy duty of 21% on imports of stainless steel cold-rolled flat products from Indonesia, which came on top of anti-dumping duties imposed in November 2021, ranging between 10.2% and 20.2%.
Rising aluminium supplies from top producer China are subduing benchmark prices for the metal, but regional cost variations have emerged as the energy crisis curtails production in Europe and demand strengthens in the United States. Benchmark aluminium on the London Metal Exchange was trading around $2,617 a ton on Monday, significantly off a record high of $4,073.50 hit last March after Russia's invasion of Ukraine raised supply worries. In the physical market, buyers also pay a premium over the benchmark price, which typically covers transport and handling costs and taxes. We will now look at the top news in the agricultural. U.S. wheat, soybean and corn futures were little changed in Asian trading on Tuesday as caution prevailed across markets ahead of a slew of central bank policy meetings this week, including the U.S. Federal Reserve. Investors broadly expect the U.S. Fed to raise interest rates by 25 basis points on Wednesday, while both the Bank of England and the European Central Bank are likely to increase their rates by 50 bps per second on Thursday. The most active soybean contract on the Chicago Board of Trade was virtually flat at $15.34 minus 3/4 a bushel, as of 06:06 GMT. Wheat was almost steady at $7.52 minus 3/4 a bushel, while corn slipped 0.1% to $6.83 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.